Good day all. Ira Epstein of Linn Associates with your financial market wrap-up and I am late. It is for Thursday, October 24th, 2019, but it's getting on to 5:25 in the afternoon. And the reason I'm late is I put a lot of time in today to a special report on your stock index, the S&P 500, which is on our website at www.iraepstein.com under research. Now remember, these reports are free to my subscribers, to my clientele. They're free to use still. But in the next two reports, we put a counter, and at that point, you can either subscribe, be an account of ours, or pay for the report a small amount of money. That's going to be your choice. You don't have to look at them. So when looking at the market today, you know, it's earnings time. And this happens every year. So you get chopped right here. It's not uncommon, as you'll see in my report, to get a bit of a pullback in the markets right here. And it seems to me that's what we're going under. Today, the disappointment was Amazon, and that's because they're throwing so much money at their delivery system. We know that. We know this isn't a one event, 1 quarter period. So that's there, but the market should understand that. And of course, other companies that you're dealing with, so you've got to get through all this. We also have, remember, the FOMC meeting coming up for bonds and notes. That is next week. The Bank of Japan meets. We saw Turkey today cut its interest rate a whopping 2.5% from 16.5% to 14%. The European Central Bank, the last meeting for Mr. Draghi, he did nothing. Let's applaud him. He had 8 years and he did a good job. Ms. Lagarde comes in now, next week. So in looking at the S&P 500, what bothers me, and I've said this over and over, is that you're not making higher highs through here. That doesn't mean it can't happen. The market has done a good job on a corrective mode of holding the 18-week average. If you were to take this out and close tomorrow under that, I think traders would be in question as to what's going on, but that'll be the key area that I'm looking at, and I don't want to see a close under 29.51. Okay, barring that, the question is, can you pop through that resistance on the weekly chart? When you come to the daily, I think you'd agree we're fighting a battle here. Now, if you're an artist, if you're not, don't watch this part, fast forward. Think of a shoulder, another shoulder, and possibly a head. It's not a perfect formation, but if I grab the bottom and flipped it over, and you break out over these numbers here of 30-30, watch out. This market could be telling you that it wants to move even higher. Right now, we're in a distribution area. You do have a pattern of higher lows, higher highs. That's bullish unless you take out 29.82. The market is over the 18-day average of closes, therefore the bias is up. But if you take out 29.82, you break that bullish pattern, and these two areas become potential support in the market. But again, I don't see anything bearish on the chart. When we come to Bollinger Bands, they're rather far away from here. The last time you got up to them was early September. You haven't done it, and all you've done has been hanging around the resistance that I think I've pointed out to you over and over on these daily reports. 30.45 is where the Bollinger Band is. Doesn't have to go there, but that's one of the theoretical resistance points. And you have a fully embedded reading, and you've had one, which tells me that on the breaks, I expect to see the pros buying these markets as they're looking for the market until that red line closes under 80 to keep trying to work towards higher highs. In the NASDAQ, you have a market here that if we look, both numbers are over 80. They were over 80 yesterday, not the day before. The day before they were, the day before they were, and the day before. You're still embedded, in other words. Now, the question is, can the market mount anything, or is it going to lose it again? You got up today to a high of 79.84. The last rally high in this market was 79.8875. So very similar to the S&P. This market's got the lower high and low pattern actually in this one, unlike the S&P, which has the higher lows, higher highs. But you've got a distribution area that's taking place is the point. The bias is up and the momentum is up. It's locked in bullish. We'll see if it can hold on. If it doesn't, two areas very similar to the S&P could be support. Right now, I think the bulls have the nod. In the Dow, lower highs, lower lows, but a lot of support right here at the combination of the 18-day average at 26,619 to 26,585, those two numbers, close under 25 888 and under this 100-day average, then you put into play the potential for here. But right now, the support's there, but this market is not like the other two. It does not have an embedded reading. It did not have an embedded reading. It's simply overbought in a consolidation area. In the Russell, even with this pullback, you have an embedded reading at work. So I'm looking for support in these moving averages under the market that it worked so hard to get to. And remember, we were just talking, boy, how this market came on a vertical rise and went first, fought at the 18-day average, that line in the sand, then the 100, then the 200. Then if it goes to the Bollinger Band, as I said, that's its last key resistance, and I think it's doing its job of holding the market right now, as you can see. But there's no reason for me to be bearish this market. With an embedded reading, I'm bullish. It's that simple. In the cash VIX, you've got a higher high, lower low pattern, but a bearish embedded reading. A bearish reading means lower VIX if it follows through. If it follows through, that's bullish to stock indices, normally. If you get down to wherever that lower Bollinger Band is, I'm going to repeat it again. I think that's where the pros will write puts, looking for the market to rally back to wherever the closest of the 100 or 18-day average of closes is. In the T-bond market, I'm nervous here because why do I want anybody, my clients, to think about doing anything through an FOMC meeting in the Bank of Japan? And you can see that. The market's sideways. I'm going to call the market still bearish, not bullish. It still hasn't challenged the 100-day or the lower Bollinger Band, and it has an embedded reading. Other than my fear of those meetings next week, and that doesn't mean they'll be bullish or bearish. I don't know what they'll do. I think traders are paying heed, and they're doing the same thing in the 10-year note. Now, in the 10-year note, I don't think we're embedded. You can't count today because we're just got that action. So we come over here to the 10-year. This is let me get to yesterday's close. That's Thursday. So both numbers are under 20, under 20, under. So you got your embedded readings. So until they're lost in these markets, with the red line getting over 20, that would be a sign the shorts are coming out. They're not doing it yet, is my point. In TLT, you have the embedded reading, the lower highs, lower lows support, the 100-day to the lower Bollinger Band, probably getting over 140.31. I'd be looking, are you losing that reading? When you lose these readings, I'm going to look for that short covering rally going into the FOMC meeting. I don't know that you have to get one. I'm not predicting one will come. In the dollar index, you've got higher lows, higher highs. You had an outside day up today. You're on the verge of the embedded reading, which it is there, being lost. Any move over 20 can do it, but does it hold intraday? In other words, stay lost? I don't know. The bears, they're right on the cusp of losing control. If they lose control, you might make a run to the 18-day average. If you don't, you're just pausing here and you might be headed to new lows on this particular move. If you use the currency of the euro as a proxy, you lost the embedded reading. You've got the swing line turning. It's already turned down with an outside day down. To negate this pattern, you'd have to take out Thursday's high. Barring that, you might be ready to make a run to the 18-day average of closes. So the flip-flop seems to be occurring there. I wouldn't know what to tell anybody on the British pound. I don't see the point of even studying it. There's too much at work there. Now Boris Johnson's called for a general election that has to be voted on Monday. Every morning you wake up, it's a whole different thing. Very difficult. In the end, I still see a bearish pattern, fully embedded reading, and you've had a bit of a rally. I don't know what just happened there, but I'm going to have to restart the computer. So I want to take the moment out to just tell you, I've put out my special report. What you have to do with that is go to our website at www.iraepstein.com, and under the word research, you'll see that I've put out the S&P 500 report.